Hello and welcome to Business Insights. It's a lovely day and I'm Alfreda Bassi. In our last episode, we talked about commercial law and what makes up business contracts. Today, we're stepping into the world of international business law and contracts, where things get even more interesting. But before we dive into all that, let me bring you the latest news in the business world. This is the business news. I am Alfreda Bassi. The Central Bank of Nigeria, CBN, intends to issue 1.21 trillion naira worth of treasury bills in the fourth quarter of 2023. This represents a 6.14% increase from the second quarter issuance. The treasury bill program for the next 3 months include various tenors, with the majority allocated to a 364-day tenor. While investors have shown a preference for longer-term securities due to higher yields and inflation concerns, this move aims to help fund the federal government's budget deficits, manage liquidity, and control inflation, which has recently surged to 24.08% in July 2023. Nigerian midfielder Alex Iwobi has completed a €22 million transfer from Everton to Fulham, signaling a potential improvement in his Premier League career. His performance statistics show consistent contribution of 15 goals and 25 assists during his time at Arsenal and 9 goals and 16 assists since joining Everton. Fulham owner Tony Khan welcomed Iwobi, highlighting his versatility and experience in the Premier League and with the Nigerian national team. Visa Incorporated is investing $1 billion in Africa over the next 5 years, with a focus on training and funding fintech startups to expand its presence on the continent. In Africa, where up to 90% of financial transactions are still conducted in cash, Visa aims to train 40 fintech startups annually and provide financial support to selected ventures. The investment seeks to tap into Africa's vast market of over 1.4 billion people, including a substantial portion lacking access to formal financial infrastructure, while capitalizing on the potential for growth in the continent's financial services sector, which McKinsey estimates could reach $230 billion in revenue by 2025. Kenya has finalized the sale of the defunct state-owned Kenya Petroleum Refineries Limited, KPRL, clearing the path for a $1.1 billion 600-kilometer gas pipeline project linking Dar es Salaam and Mombasa. The feasibility assessment for the project has been completed, and the transnational agreement is expected to follow. The gas pipeline project aims to supply gas from Tanzania to Mombasa County for power generation and other uses. The project is seen as crucial for boosting commerce and reducing energy costs in both Kenya and Tanzania. The pipeline is expected to cost $1.1 billion and will play a significant role in shaping Kenya's energy future. The largest oil company in the world, Saudi Aramco, is reportedly considering a secondary share offering on the Riyadh Stock Exchange, aiming to sell a stake valued at up to $50 billion before the end of the year. The company has engaged in discussions with potential investors, including multinational oil firms and sovereign wealth funds, as it seeks to avoid legal risk associated with an international listing. This move allows Aramco's 2019 initial public offering and a delayed plan to sell additional shares last year, with the proceeds intended to support Saudi Arabia's efforts to diversify its economy through its sovereign wealth fund, the Public Investment Fund. Chinese President Xi Jinping announced that China plans to widen market access in the service industry and promote cross-border services trade. This announcement was made during the China International Fair for Trade in Services in Beijing. Xi emphasized the focus on expanding the domestic market, increasing imports of high-quality services, and reforming the country's basic data system. These efforts are part of China's strategy to stimulate economic growth and recovery as its trade has been facing challenges due to weaker demand. Additionally, China aims to promote the integrated development of high-end manufacturing and modern service industries. The British government is reportedly in advanced talks with the UK's largest steel producer, Tata Steel, to provide €500 million in funding with £700 million from Tata Steel's parent company in India, in order to secure the future of the Port Talbot Steel Works in Wales. This financial support is to ensure the construction of more environmentally friendly electric arc furnaces, which will potentially result in job losses due to reduced staffing requirements. Having employed around 8,000 people in Britain, Tata Steel has warned that without government assistance, facilities will close and up to 3,000 job redundancies are expected as negotiations continue. It is now time to enter the capital, commodities and currency markets. Stay tuned for the updates. On the first trading day of September 2023, the Nigerian equities market started on a bullish note, with the all-share index rising by 1.47% to close at 67,527.19 index points. The market capitalization of equities gained 535 billion naira to reach 36.958 trillion naira. The market breadth was positive, led by Tantalizer as the top gainer with a 10.00% increase, while Prestige led the losers with a 10.00% decline. Transcorp was the most traded stock by volume, and in terms of value, Access Holdings led the chart. Additionally, Tier 1 banks, including GTCO, UBA, Access Holdings, Zenith Bank and FBN Holdings, saw positive trading sessions. Moving on to the Ghana Stock Exchange, GSE, approximately 252,000 shares were traded, amounting to a market value of 557,000 Ghana cedis. Compared to the previous week, this indicates a 77% decrease in trading volume and a notable 66% decrease in turnover. The current market capitalization of the Ghana Stock Exchange stands at 72.9 billion Ghana cedis. In total, 17 equities listed on the GSE were actively traded, resulting in just one gainer: Unilever Ghana, which saw a notable share price appreciation of 7.87%. Conversely, there was one loser, MTN Ghana, which experienced a 2.03% decline in share price. Among the stocks traded, MTN Ghana led in terms of trading volume with 206,493 shares changing hands. This was followed by Unilever Ghana with 26,725 shares, SIC Insurance Company with 8,888 shares, and EcoBank Ghana with 4,813 shares. Let's quickly mention the updates. In the commodities market, the market has its eyes on wheat, currently valued at 571.00 US cents per unit. Gold remains unwavering, with the precious metal commanding a substantial price of $1,938.80 US per ounce. Investors and enthusiasts alike continue to flock to gold. As a store of value, silver appears to be mirroring gold's and is currently valued at $24.16 per ounce, further solidifying its status as a valuable commodity in the market. Also, copper, often seen as an indicator of economic health, is slightly lagging behind, currently priced at $3.81 per pound. Let's not forget, Brent crude oil holds its ground at a current value of $88.55 per barrel. Oil prices are of paramount importance globally, impacting various sectors and economies. In the parallel market today, if you want to buy US dollars, you can get them for 910 naira of your local currency. And if you want to sell US dollars, you'll get 917 naira of your local currency for each US dollar. If you're looking to buy British pounds, you will need to buy at 1,160 naira of your local currency for £1. And if you want to sell pounds, you receive 1,170 naira of your local currency for each pound. For euro, the buying rate is 975 naira of your local currency for €1. And if you want to sell euros, you'll get 985 naira of your local currency for each euro. Keep in mind that these rates can change frequently, so it's a good idea to check the latest rates if you're planning to exchange money. And that concludes our business news segment. I am Ofreta Bassi. Stay tuned for what is to come on Business Insights, where Olaoluwa Awe and Lateef Jimo will do a brief analysis on the Nigerian stock market, then talk about international business law and contracts. It's going to be an insightful discussion, so please stay with us.
Welcome back to Business Insight. It feels good to be here anew. It's a new week. I am Olaoluwa Awe, and today we want to talk about international business law and contract. But before we get into all of that, let's quickly make sense of the development in the stock market, especially here in Nigeria. And to do that with me on the show today is Jimo Latif. You know him. He is an experienced stockbroker. Good morning. Welcome to Business Insight
Good
today.
morning. Good morning.
Yes. Yeah. Well, it's a new month, and I think Friday was the very first trading day of the month.
Yeah, exactly. But if you look at what happened last week, is an eventful day, and the equity market appears all share index and market capitalization gained about 3 basis points, 3% basis point. The NGX all share index surpassed 5 years, at least March 2008 was when we have this kind of the volume of transaction we had as of last week, and the activity level increased last week as the volume and transaction value actually increased too, and we have all major sectorial have been on green, except some maybe the sectorial like oil and gas that are a bit not still on flat, but all major sectorial indices are on green. And then the financial, if you look at the financial result of like Stanbic, Fidelity, and also they released last year, which gives direction to where to put your money and actually increase the sentiment in the market on where you want to allocate your fund. Then Dangote Cement, and they released a scheme of arrangement. Dangote Cement, Dangote Sugar Refinery, and the NASCON. They are, I think, they are about concluding the deal, and then those are the things we expect. That is basically the event of over the last week. Yeah,
before we get into the Dangote development, let's talk about some of the information you have mentioned. You know, as we like to do on Business Insight, we want to make sense of it. When we hear that the NGX All Share Index appreciated by 3.44% to close the month of August at over 66,548. What does that really mean for the investors?
The All Share Index is the total capitalization divided by the deals. So that's the way we do the growth calculation in terms of based over the current that will give you the percentage or the fraction of what. That's why you see some increase or decrease, because the value what happened last month or the preceding day, what happened, they divide that, they remove, they get that percentage. That was in terms of units. That is why I believe that. But the whole share index, the total capitalization of the whole market, in terms of what are the total matter, what are the company value that are brought to the market in that period, and what are the allocated business proportion of it.
Well, this does mean that the capital market in Nigeria is experiencing some little growth.
That part of the thing I've just said. If you look at what happened, it happened about March 5, 2008. That was when we experienced this kind of growth, and we're looking at it based on the event that come over the weeks. I mean, it's a very, in terms of the releasing of the report of major company, you can see the activity of the heavyweight, Dangote Cement, major bankers like Jitco, Access Corp, and all this.
So does this still mean that it's still a good time to trade in the capital market in Nigeria?
There's never no good time not to trade. But what you need to do is that it depends on your preference as a shareholder. Look, if I want people that look at daily returns in their in their returns, they will have to invest. But there's always something to look for in terms of fundamentals. The way we look at fundamentals, and you can within this these are like you can see some company results have come in. There will be some that will declare dividend, some that will have a project that will manifest in a very, very short period. With the information will have filtered into the market, people have invested on those things. Although you need to be cautious when you are doing it, because you need to there always a rule to the market. Don't just jump in. You need to know the fundamental. Do your technical analysis of how over time the movement in the market share, and to be able to determine accurately whatever you want to, which sector you want to put your funding. Because one thing that it can be so confusing sometimes, but that's why you need to get your fact very clear to be able to know where you really want to put your money.
Now let's get to the Dangote Sugar Refineries PLC. That's the DSR and NASCON Allied Industry PLC merger, the proposed merger. You know, it's becoming realer and realer by the day. According to reports, DSR and NASCO Allied Industries over the years on the Nigerian Exchange Limited NGX have maintained stronger earnings and dividend payouts to shareholders, and a fundamental that have impacted on stock prices. According to some reports, this can help, you know, investors
or
make more
direct
money.
your mode of investment. Because when you look at, there's what we call price earning ratio. When you want to determine, apart from the price earning ratio, how long will it take you to recoup your capital? When you put, like for instance, I buy 10,000 worth of Dangote cement. I want to look at how long will it take me to recoup this particular fund, based on the, like you just said, the growth in the market and the growth in the earnings. So the growth in the earnings are many, like for instance. So these are things we look at, and then that said that an analyst will look at various technical and possibly fundamentals. Part of it is apart from the earning, then look at the future prospect of the company. What does the company stood for? Not everybody may not have, but maybe future earning or in terms of growth in your investment in any other. So all these are what we look at. So looking at the Dangote cement, what we're looking at now, apart from just read the trajectory out, that have a good earning and all those things. Maybe every year and year they give returns to the shareholder in terms of increase in the growth in the price of the share as well as the dividends. Good.
Now let's also talk about what this will mean for people who already have Dangote shares, for those who already have NASCON shares. For example, we were told that the internal restructuring will be executed through a scheme of merger under relevant laws, as shareholders of NASCON will receive 11 fully paid up DSR shares for every 12 NASCON shares they hold, resulting in over 2.4 billion new DSR shares. Shareholders of DRL will also receive 14 fully paid up DSR shares for each DRL share, totaling over 2.7 billion new DSR shares.
Well, it is a bit complex, but I need to explain it. It's a bit a lot of calculations are coming. I don't need to bore. But what is the scheme of arrangement? Is that, okay, I know what my company was. What this can we imagine? It's not acquisition. There is a merger. There's an acquisition. Merger means that the likes we're coming together. We're managing the two companies. But in terms of okay, what was my share worth as against what you sell, based on what you have in terms of asset valuation, in terms of other business proposals you have. But if you look at Dangote, maybe has more capital base in terms of asset base than NASCON. This will form a base of arrangement. Okay, at what proportion of my share will I be traded? I mean, okay, based on what I have, I will have, I mean, two shares of NASCON will be traded for one of my own. That means for every share you have in the old Dangote, the new Dangote will be having 2 shares. So that this is what we are talking about. The existing shareholder will be happy because they're having their investment base opening up, and this may later give them more returns, as it were. Because the essence of margin is to access to capitalization, access to more business prospects. There's a lot of advantage where we have towards mergers. Merger is not just, they're not merging because they want to merge. There must be something I want to gain before I merge. Now, for instance, like husband and wife marrying themselves. There must be something I want to gain from my wife. So all these things are being put together, calculated together to be able to give me what price will I be trading for your shares. Now,
let's also talk about the stock market in Nigeria, especially for a good number of days in the last month, that is August 2023. One thing that we have noticed is that Transcorp has been the most traded stock by volume, you know, for a good number of years. Even there are days when consecutively Transcorp was the company with the most traded stock by volume and in terms of value. What do you think is responsible?
What accounts for is very simple. No, they are going to the energy. They want to go into the energy, and they are most of the Transcorp investments is based on the energy we call this electric transmission or whatever. They've really focused more on power sector. And this is the time the power sector is gaining momentum, even from the federal government. So these are the things that people are really want to key into that. Like I told people want to look at, before they invest in company, they really want to look at the prospect, the future prospect and the current one. It depends, okay, I want my money fast. Somebody, because they are doing the energy, and we believe energy will be more demanding in future. I mean, invest for a long time. So is for both short time and the long time. So Transcorp is still one of the best having to invest your money on.
Now, let's also quickly have your opinion on this before we get to international business law and contract, which is the main topic for today. We understand that a good number of Nigerian businessmen and African businessmen will have a G20 Business Council meeting. And in fact, we know that Nigerian businessman and philanthropist Tony Elumelu has been named a co-chairperson of the Business 20, that's the B20 India Action Council on African Economic Integration. And the B20 is the official G20 dialogue forum with the global business community. It is among the most prominent engagement groups in G20 with companies and business organizations as participants, and they are to lead the process of galvanizing global business leaders for their views on issues of global economic and trade governance and speak in a single voice for the entire G20 business community. The word on the streets here is that one thing that's going to be prioritized is the integration of African businesses, especially on the global scene. But you have, a policy direction for the leaders that are going to be talking about global business on the global scale and business in Africa.
Basically, the Asians are now the way people are looking towards the Asia Tigers on top of the Asia, Indian, Chinese, Singapore, those people. If you look at the direction of the big agreement, this big that just came in, is to actually try to make every West Africa to be financially dependent, because we've been enslaved by all these our colonial masters. So the BRICS came out. This is part of the outcome of BRICS. Because if you look at Indians are doing very good in terms of any international business. In fact, I learned last week that they've already gone to the sun. They've gone to the sun where, in fact, most of the places they've gone to now. And they're really developing their energy sector and power. And don't even look at artificial intelligence. They're one of the leading software experts too. So India has a very robust international economic power that one can key into. The developing, Africans are just a developing country, not developed. And look at what is happening now. People are looking at alternative because we believe we are being enslaved. We want to have a financial freedom. Okay, if India took their independence, it's not too long that we did that. How are these people, how is Singapore doing it? How Malaysia of this world doing it? So we need to look at the model, the business model, to be able to add into our hand. And looking at people that even most of the government went there. If I can, there's one day went to recent time, all the governors were there, and people are looking at, okay, where can we tap? Which area that we think we are lacking that we need to harness to our economic, because every state now responds for it, because President Trump told them that individual, don't look at the president, they will be talking about each state has to develop their resources, develop what you have, make sure you make yourself financially stable in terms of food security and all that. So all these things we need to put together and try to look at how well we can get tapped from these untapped resources that these people had, because most of our colonial masters are not giving us what we want.
All right, now, one last question on this before we go on the break and move on to international business law. We understand that about 38 private sector leaders accompanied President Bola Tinubu to attend the Nigeria-India Presidential Roundtable and the conference during the G20 summit in New Delhi in India. So I want to believe that once this private sector leaders go there, they're going to network, they're going to learn new international business, or they're going to strike new international business deals.
Apart from that, the major reason, the major thinking of this government was to actually allow the private sector, it's a private sector driven economy. You understand? It doesn't want to be, not unlike before, everything federal government. No, no, let the private develop, and then you'll be able to task them, give them, take from them whatever in terms of form of return to the government, instead of government, because of why we have this a kind of mismanaged of funds.
No, my question now is that 38 of them have are going to attend the meeting,
sure,
according to report. How do we ensure that this trickles down to small businesses in Africa, small businesses in Nigeria? We all can't go to India, you know, to learn or to be a part of what is going to be happening there.
I think when they go there, because they have resources to, not all the small, all the SME have money to go. When they come, they trickle down. They have to come in form of training the youths, which form most of our SMEs. The youth will be trained. I learned one company about 2-3 companies start training even that I think you can. There are of them that have been at the state level. The state is developing the SMEs because we have a lot on tap resources that we need to harness, and we need to engage the SMEs to be able to, because they are the one. The big ones don't have time to go and be doing those. They really have. It's a high volume capital driven project, so they can just come in form of assistance, giving the loan to the small to the SMEs and try to encourage them to tap into the untapped wealth that we have.
Thank you. Thank you very much, Lateef Jimoh. We'll go on a short break now. When we get back on Business Insights, we delve straight into international business law and contract. Stay tuned. Isn't it a beautiful coincidence that today on Business Insights, when we'll be talking about international business law and contract, you know, about 38 private sector leaders will be at a meeting in India to talk about more international business opportunities for Africa, you know, and that's why we need to take this very, very seriously, because when we talk about business, we talk about deals. When we talk about deals, we talk about contracts or legalizing these deals to ensure that all the parties hold up, you know, to their own end of the deal. Lateef Jimoh still joins me on Business Insight today as we look into that. So when we talk about international business, what makes a business, what makes a deal an international deal?
And let me start in terms of the international business law. We talk about it relates to the policies and procedures that govern the relationship among the nations in terms of deals, in terms of whatever transaction you want to have together. And if you look at the trajectory, that's from treaties, custom, and the company itself. The treaties are okay, like they went to India now to go and there must be some agreement in terms of treaties they will sign. And which, like for instance, now in terms of taxation, we have. If it belongs to some, we have some double taxation relief, you have to belong to the Commonwealth nation to enjoy that particular. You don't belong to Commonwealth nation, you cannot. It's an agreement. Okay, if you have the business based on the law existing at that moment in that company, you are entitled to have this holiday, tax holiday. And in terms of that, we have other. No, we have a lot of agreements in terms of torts, in terms of criminal, in terms of sales contract, employment and labor contract, a lot of things. And this contract still emanates from the fact that I'm dealing with an opposite, a different business environment.
Entirely.
And because in Nigeria, we have our own tax treaty, we have our mode of operation, who takes what, which do what. But in some other countries, it may be more stringent than what we have. If for instance, in like UK tax law, you can't try it in Nigeria. You are gone, because for even if you emit, if your car emits a lot of smokes in terms of combustion, more. They will tax you.
There are rules and regulations.
There are rules and regulations, but very strict because they know where, and look at the sector allocation of those taxes. They believe the independent other will enjoy more. Unlike Nigeria, we have a progressive tax. But the progressive tax, even the poor, at least in terms of this double tax, all these agberu, all this tax being levied on people, that by the time you accumulate all these tax. I was coming this morning, the guy that was driving said he has paid 5,000 naira. So these are small taxes that affect, and this will pass over to the consumer.
Thank you very much, Lateef Jimoh. You know, as I mentioned, there are certain things that make international business or dealing with international companies really different from dealing with local companies. But when you are drawing a contract for an international deal, there are certain things you need to consider. For example, the offer and acceptance, which is common with every standard contract, whether local or international. You talk about parties, you talk about consideration, you talk about legal purpose, you talk about competence, terms and conditions, then you talk about dispute resolution and termination.
Before we get to the, you are only dealing with only contracts there. When we talk of contract, this is binding rules of contract, over acceptance and all the consideration, whatever. Before I go there, the tax environment of each company is peculiar to what is happening in that environment. And based on the direction of the government, where does the government want to gain more money from? In Nigeria, maybe, okay, they tax more to tax the mob, but another country may be to tax more to feed to tax the rich to feed the poor. But that's why we have to look at, it's a no list, it's not a business law is not something, international law is not something you can do, but let me just limit myself to the contract. There is binding contract principle in terms of offer and acceptance. Offer, before I can say I must be able to have forward what I'm offering you. To be able to bind me. Because I'm going to be a offer for me. Okay, I want to sell this gadget. You must express your offer. Okay, I'm interested. I will accept it. At what price? I might accept. That's offer. There must be an agreement. It's a mutual agreement between two. I'm offering this. I'm offering this thing for sale, and I said that okay, I will agree. There must be an agreement. There's no agreement. Then the one that follows that one is a consideration. Very important. A consideration is an amount. It may not be in terms of cash, but you expect consideration. I'll be taking this at this price, or I'll be giving this for this. There must be an agreement. A consideration means what you are putting down for that. After the acceptance of the offer, then you must express your consideration. Okay, this is what I'm considering paying for this particular transaction. After that, we have another one. We have mutual. We have meeting of the minds. Two must agree on certain contract clause before it can be binding.
Okay.
And when you say something is binding, it can be tendered in the competent law court that okay, based on this agreement, is not. There's what we call circumstantial evidence. This is real evidence we're talking about in the law court. So you understand? So by the time you tender, apart from the meeting of competence, am I competent? Okay, I want to have a deal. A man comes to me to buy something, and did that guy have the competence or capacity to trade? He has a problem.
And that's where due diligence comes in.
Due diligence comes out of it.
Because you need to verify the other party's competence, ability
before you
to deliver.
You're coming to me, you want to look at you. A madman. You are mad. Don't say this man is mad, and you are giving him. You want to do a business deal with him. Then apart from being mad, you have to look at the capacity in terms of does this man. Part of the diligence you have to look at. Okay, okay. Does this guy have the money or something capable to deal with this contract? Definitely, he has to show you that he has that capacity because you need to go deeper into some of that. So you understand, how already competent and without. These are things we look at, and then the legal capacity in terms of could it be legally binding when you get to the court of law, part of what I told you. So these are things we look at to make a contract binding.
Now, the question now becomes, these are some of the things that we have looked at in previous episodes of the program when we talked about contract, but today we are focusing on international business. So the factors or the elements of creating a contract within Nigeria, does it still apply to when you are creating a contract with somebody in another country, or you are doing an international deal?
This contract is now our law. It's part of the borrowed law. You understand? Contract law is like a law of tort. It has a lot of negligence. There is a different law that although we try to adapt it based on our own environment, but the law is still law in terms of contract. What happened here may be one of the standard practice for contracts to be binding is similar to what we just discussed. Both international law and that's local law. There must be capacity, there must be offer to any book of law. I did the element of laws when I was doing my contract laws as an accountant. I did them when I was doing my taxation, when I was doing my stockbroking exam. So these are things, they always the same. Sure, understand. But the precedence might come in terms of, I told you about the source of, we have treaties, customs. We have customs too. Sometimes you need to look at that. But the custom law must not negate the standard law and the standard practice.
Now, let's talk about enforcing contracts. We are dealing with multiple jurisdictions here. Maybe I am in Nigeria, I do a business with someone in Ghana, and so on, we draft a contract. When you want to enforce such a contract, in case there's a breach, how do you go about it? Do you go to a court in Nigeria? Do you go to a court in Ghana? How do you navigate such terrains?
It depends on where the contract is coming from. Who actually...
Don't forget the two parties are from two different countries.
Where does the contract coming to? I mean, does it take place? Is it Nigeria or India? So you are...
Do you mean physical location?
Physical... Well, okay, I want to sign a contract. Somebody from our country comes to Nigeria, wants to sign a contract, a business deal with me in Nigeria. It's binding on Nigeria law. It's meant to go to Nigeria because it's coming to invest or it's coming to have a deal in Nigeria as opposed to being in India. If it's India, we know that, there are what we call residential law. Where you reside is where the law
binds you.
So when you are residing, the business, as in business contract itself, residing in Nigeria, and Nigeria, so definitely if you're binding on, the law of Nigeria is binding on you.
Because we have had instances when foreign companies come into Nigeria to establish a business and open investment opportunities for Nigerians. Then they invest and something goes wrong, and this foreign business is unable, to keep up with its own part of the deal. But at the point of enforcing the contract you have signed with the company, you go to a Nigerian court. But if the party involved, I mean the people that you signed the deal with, if they are not, what if they are not physically present in Nigeria at that point in time? How then do you get, okay, in a simple case of investment, I invest with a foreign company, there are a good number of them in Nigeria. They promise me certain investment or return or whatever it is. I invest my money. They don't follow up with their own part of the deal. You go to their physical offices in the country. You do not find anybody. Where do you get your money from? Even if you go to a court and a court makes a pronouncement, from what account, from who exactly would pay you your money if the foreign investor is not in the country?
If foreign, what business are before you even the business must exist. How does it exist? You need to go to the right place to find out about that business. Maybe from the consular, the office of that consular office of that country. If I'm investing in Ukraine, okay, I want to invest in the corn in the Ukraine. I'm in Nigeria. But you know that I'm now, we call it cross-border business. I'm taking my money, I'm investing in another country, not in this country. So I'm binding to follow the law. So I need to understand the business environment of that place. By going to the consular office, they have consular. Go there. These companies, is it existing first? You need to go find out. If it's a sponsoring scheme, you will know. They will have given you don't invest. Or there are other places you can even find the existence of that particular company. Nobody can just come on the internet that come and invest $1 billion on the business I don't even know how it exists. And you want me to no, that's not. You yourself need to do a due diligence, a clear due diligence of that particular business in terms of are they really existing? What are the law governing? Will I be able to? Because by the time you know more about that company, you need to study the company. how has it been repaid? How has the return been paid? Have they been paid? Or other things? No, these are information you need to get from you can go to the analyst to help you do that. You can go to any business consultant will do that for you.
Another quick question now is that are there ways to ensure that if you have an international business or an international deal with a company, in this instance that I talked about just now, and you are dealing with somebody who is not physically present in Nigeria, or whose physical presence in Nigeria has not helped in you trying to enforce your contract? Are there international treaties and laws that can ensure that even right where the company is or where the person is, for example, in Ghana, they can still ensure that the person owns up to his or an own end of the deal from wherever he or she is? I
think we have a lot of lawyers that deal with international laws. When such misdemeanor comes in terms of your investment, when there's a problem, and you look at it that, okay, they want to shoot me. How will I? There's a way. You go to the right lawyer that has an international experience. But one thing, because you go to equity company with a client, you yourself must have done your own due diligence. You don't invest in. I can't invest in Ponzi scheme. Somebody just come on internet. I don't invest. No. You as yourself already. You already want your hand already. So, what we say that first of all, do your own due diligence before you. When there's a problem coming in, based on the case you have been able to build up. So the lawyer can take it from there and get your money back through the competent court of that particular. We have a lot of lawyers that deal that can represent you internationally. It's not something that we can, because for the enforcing of that, but for one thing, that before you draw an agreement, you must involve a competent lawyer. You don't do things because the lawyer must have advised you, or the consultant. This is what's happening. Don't do this. Or this is a problem here. Don't do this. They will do a lot of due diligence of that particular. You don't just wake up and say you want to wake up. Okay, let me invest 1 billion in Ghana's. You'll be doing wrong because you need to understand, and that part you need to understand what the business stands for. What are the things that they are doing in that particular that affect that company? In case it comes in case it manifests. So I won't be badly burned. You have to hedge your fund investment.
Yes, when doing international businesses, there are cultural and legal differences, as you have mentioned, and these are key issues that you must factor in when coming up with a contract or when you're doing a deal. And we need to talk about how you can ensure that this does not eventually become an issue. What are the things that you can do to ensure that you mitigate that effect of cultural and legal differences?
No, I said, we still need to, it's part of the due diligence you're going to do. For instance, you want to invest in Saudi, or maybe in Saudi economy. They don't do interest. They share profits because they don't believe in interest. So this, and you want to, it depends on what you want to, the purpose of your business and the business motive and directions. So I still maintain that you still need to go to the right consulting engagement to be able to understand the environment in terms of the business law, in terms of the economic, and what does. So these are things, somebody will write, okay, these are the problems you may likely face in this business. Are you ready to go? So depends on what a kind of investor who you are. Sure, you understand. The preference matters a lot. Some people like risk business, some people like moderate risk business. It depends on what risk and return goes hand in hand. The higher the risk, the higher the returns. But the higher the loss, the higher the. So it depends on what you want to.
I'll just really talk about. I'll just make a list of certain laws or certain things that you need to know about international business law, and hopefully you help me, put more flesh or add more flesh to that, because he has mentioned it, but I just really want to be a little bit more specific. Now, when we're talking about, if we are doing international business, these are some of the things that you must have at the back of your mind. For example, we're talking about choice of law. It means parties can pick which country's law will apply to
the business
contract. Yes. We also talk about international conventions. As he has mentioned, there are some agreements like the United Nations rules for international sales and standard rules. So these are the things that you also need to pay attention to. Also, there's jurisdiction. This means deciding which country's court can make decisions if there are problems. And we'll talk about recognition of foreign judgments. You must be ready to recognize judgments made by foreign courts. This ensures that decisions made in one country's court are accepted in another. That is very important. And we'll talk about bilateral treaties, which you have also mentioned. Certain countries have special deals with each other that affect contracts. You know, for example, if you have been following the news, there are countries that have decided that, okay, if you are trading in this commodity, you are trading this commodity, we will not tax you for this, we will not tax you for that.
AFA.
Yeah.
The new law that had to do with, I think it's economic, something, I've forgotten about the law of ECOWAS trade agreement, UN trade agreement. Like for instance, we are Africans. We still bind by the regional, but still there are some, a little different term of the law that are being practiced in that particular, based on, because the law might, okay, the law might favor the rich and the poor. It depends, how I say, you have to look on this, they might favor the poor and the rich. So it depends on what the government of that particular has a mission to achieve. So these are the things I'm just trying to put, while like I say, it's a very wide, it's not something but what I just want to say, before you invest, let me just highlight, before you invest, you need to understand the environment, the standard. You just need to understand the environment you are investing in.
Now, okay, so let's also talk about how to ensure that these contracts work in different jurisdictions and different countries. And we'll also talk about the implication of having an invalid contract. Say you have a contract with someone now, and due to one or two things that you didn't do, the contract becomes invalid. Sure. How can you even prevent that in the first place? And if it happens, you know, how can you deal with that?
Before you sign an agreement or contract, you have to get a learned person that understands that business and that understands the law that are being practiced in that particular environment. Because the clauses, you might think, some agreement come with a very ambiguous statement. That means you're capable of reading 2 minutes to it. If you are not careful, for someone that will break those things down for you into ABC, you might be bonding, you might be putting your hand in the fire. But like I said, and it's very clear, the principle of, in terms of contract agreement, there's a binding principle. So these are, if you follow those principles, I think, and you follow it and allow it to actually reflect in your agreement, I think the better you go.
Yes, I think the summary of today's program is that to make sure that your contracts are good in different countries and that they are valid so that you don't run into trouble in the end of the day, ensure that you pick a law, say which country's law apply in your international business deal, choose where, decide where the problem will be solved eventually in case there's a problem. And then use international rules, follow worldwide agreements for more certainty. It is also very important that you get legal help. He has really harped on that. Get a professional to guide you, someone who knows about regional treaties, international laws, and all of those things that can either, you know, promote or hinder a nicer international business deal for you. And that's the program today on Business Insight. Thank you very much, Mr. Lateef Jimoh, for your time on the program. Today, I am Olaoluwa Awe, and I say thank you very much for watching. We'll continue. Hopefully, some other time, we'll even line up some of these major international treaties and business laws, you know, that guides business dealings in the international space. But for now, I say don't let anyone or anything stop you from having a productive day. Bye for now.